Hey, business owners, is spending more on expenses a good strategy to reduce taxes? Let me know your thoughts in the process. All right, I'm going to share my screen with you and I'm going to kind of walk you through what my thought process is on this. And this is a combination of things that I've learned from, different people, groups I'm in. So, all right. All right, so in the past when I worked with, or just, since I am a business owner, being amongst other business owners, you kind of hear the topic come about of, well, if I spend more on my expenses, then that will reduce, the amount of taxes I have to pay. And that is probably true. But let me walk through this process with you, and it's best to do it with actually using some numbers. Okay, so let me hide that. All right, perfect. So I want you to look here. This is just, this is a little table I created just to kind of play with numbers. So you can see here, this row up here is a tax rate, and this 24% is going to be based on this column here. And then we have 32% for this column. Let's pretend that our sales were $175,000. Okay. Now, in this example here, the expenses, they're going under the assumption that if they spend more on expenses, they're going to pay less in taxes. Okay. So they spent $122,500. That's going to leave them with $52,500. And then if you multiply this times this tax rate, and I was just pulling, numbers for tax rates so that, these aren't like definitive numbers or anything. It would be based on you and your personal business and family. But in this particular example, I'm multiplying the 52,500 by the 24%. That is going to be $12,600 in taxes, and that's going to leave you with $39,900. Okay. Now let's go to this this column here. We got the same amount of revenue, but in this instance, I am a certified Profit First professional, so we do advise for this particular amount of revenue, you would spend about 30% in expenses, and that's exactly what this amount is, 30%. So that's $52,500. That will leave you with $122,500. So that is, obviously a lot more money than you are left with over here. So then you multiply this by a higher tax rate because now you've got more money. So you're probably in a higher tax bracket. So let's just pretend it's 32%. And then that creates your taxes due of $39,200. And you can see that is more, obviously, than over here, right? But then when you get to the bottom line of what, you get to what you're left over with in the end, you see how much of a difference that is? You're left with 83,000 as opposed to, almost 40,000 over here. And that's all because, the thought process over here is if you spend more money on expenses, you pay less in taxes, which is true, according, to this. But then that bottom number, what you get to use, you see how much less that is. So let's just do another example. Okay, so all I did was I used the same numbers. I just changed the tax rate just so you can still see what's happening. But you have your total sales of 175,000, same amount of expenses. So you're left over with 52,500, and you multiply that times the 12% tax rate. That's going to get you at 6,300 in taxes, and your bottom number is 46,200. Now you come over here, same thing as before, except, we're only doing the 30%. That's based on this revenue with Profit First, doing at 30% in expenses. So that's 52,500, leaving you with 122,500 here. Multiply the tax rate of 22%. This is your taxes, 26,950, which is, yes, very much more than the 6,300. But in the end, you see, you are left with more money here, right? Because you didn't spend a whole bunch in expenses. Now that money is for you at the end. All right, so I just want to say this is as a disclaimer that I need you to please consult with your CPA or tax advisor for the best options for you and your business. I just wanted to put together, the numbers so that you can visually see and compare and just kind of think through that whole process of is it beneficial for me to pay more in expenses versus you know and paying less in taxes. What is the right balance for you and your business. And again, this all also depends on, once you have to put together your own personal money with your spouse, and maybe you have kids and itemized deductions, like whatever all of those things are. And depending on where you fall on the tax bracket, because if you're falling really close, like where you're like kind of like on the fence between the two brackets, you know, your tax advisor may be saying like maybe you want to consider possibly investing some money to reduce the taxes, or finding ways to make it more beneficial for you as a business owner, um, and for what's good for your family. So make sure you're always consulting with a tax advisor or a CPA for your best options on your particular numbers. The numbers I gave were just for an example. All right, so thank you for your time. Feel free to reach out to me if you have any questions. I'm going to stop my screen share. My name is Honey Bueno. I am the CEO of Tracking Transactions, where we help insurance agencies with their bookkeeping and their profits using systems called Applied Epic and Profit First. So thank you so much for your time. Let me know your thought process on your tax strategies, and I will see you next Wednesday.